What's up, traders? It's Vincent Mokotedi giving you this daily top analysis of the 6 YouTube watch list, which is the euro dollar, the pound dollar, the euro Canadian dollar, the pound Canadian dollar, the euro and the pound, and last but not least, the US dollar and the Canadian dollar. So, traders, with that being said, let's jump straight into the market and understand that yesterday we were looking for this. Let me zoom in so that we can understand. I do hope I do my job very well in making you guys understand and see trading better. Now, yesterday, this was a pattern that I was looking for, a bullish pattern that I was looking for, and the continuation to the upside to take out structure at 1.1728. Now, that did not happen, of course, and we did suffer what? An invalidation around here. After having that invalidation, did we have a re-entry? No. We are about to enter the re-entry today. Of course, we are still biased to the upside. This changes nothing. This doesn't mean now we will be automatically looking for selling opportunities. No, this does not mean that. What does this mean? This means we got a discount and we will be looking for better price to come into the market. This is what I'm expecting to see, to continue to the upside and take out structure where the target is at 1.1728. Now, if you do pay close attention to what I did draw yesterday during the live session, which is this is how some people will understand and see this. You will see that we are at the 61.8 Fibonacci retracement, which is a great place again to look for buying opportunities, of course. And with that being said, traders, this also amounts to buying signals that might continue to the upside and take out structure here at 1.1728. Now, this is the euro dollar for us, and we are still biased to the upside. Nobody is still trying to sell this. The only time that we will be selling this is if this continues down from here to here. We still have no pullback, so it will be better if we continue to the upside. But if we go through this 61.8 Fibonacci without any pause, just continuation to the downside like this, and then we get to the 78.6 Fibonacci retracement without any pause again to these levels, then we would know that partially the dollar has gained momentum over majority of the pairs, of course, and then we would start be looking for buying opportunities or placing setups or scenarios where we will buy. But for now, we are still structured to the upside and we are at the best price to look for buying opportunities, of course. So without wasting much time, traders, this is the euro and the dollar for us, still biased to the upside. Nothing has changed. Let's go straight to the pound and the US dollar. And traders, with the pound and the dollar, it's a very nice setup, of course, because why? We did come to the second demand zone, of course, of the week, and then after this second demand zone, it does look like we are close to the 50% Fibonacci retracement, even though we did not reach it, but it is still lingering within this. Remember, the pound is stronger than the euro. That's why we see the euro retesting the 61.8 Fibonacci, but the pound barely testing the 50% Fibonacci retracement, but still lingering around the 38.2 Fibonacci retracement of the Fibonacci of our bias territory. So with that being said, we are still biased to the upside. This is most likely what might happen, and taking out structure at 1.3471 is most imminent and most likely. So with that being said, traders, this is a beautiful setup for any trader looking to buy this. We are going to the upside. We are not looking for any bearish setups. The only time we'll be looking for bearish setups is if we get down to the break of structure right here, the weekly break of structure, and a pullback, and then a continuation to the downside, which we will target 1:3 risk to reward ratio, or the break below the weekly break of structure right here, which in turn would look like something like this. The break below the weekly break of structure, a pullback to retest the weekly break of structure in the pound and the dollar, and then continuation to the downside to make that 1:3 risk to reward ratio. This is the kind of setup you take only when, okay, in the real account traders community. This 1:3, we take it only when our new high or new low target is less than 1:3 risk to reward ratio. Anything that is above 1:3 risk to reward ratio is advantageous to us, because either way, week in and week out, we are going to take out structure. So with that being said, traders, this is what we do. And in terms of reversals, we are now going to take 1:3 risk to reward ratio to the downside in this manner. So with that being said, man, don't forget the setups, don't forget the rules, because I always remind my real account traders community how to do this, and the rules are always being posted every day so that people can go through them. Even if some people don't write, no matter how much we tell them to keep journaling everything down, they do not journal everything down. So it helps them to keep on reading them every day when I send the rules daily, so that they can understand, and reading them, it's much better. It feels like they are the ones who are journaling them. So this is the rule of 1:3 risk to reward ratio. Some of you might be asking, why is he saying 1:3 risk to reward ratio, whereas in some of the signals he gets 1:6, 1:8. Sometimes it is the system that we are using, and you need not to be left outside when I'm using that system. So traders, that is it with the pound and the dollar. Let's go straight to the euro and the Canadian dollar. And traders, very simply put, with the euro and the Canadian dollar, from Friday we did have this sharp drop, expected to see the retest both on this demand zone, of course, and we had an ABC inside this. This would be like an A if we do get, and a B, and this would be a deeper C. And to pay close attention to something, we're already right here at the 78.6 Fibonacci level retracement. And if we do not get any bounce from this level to take out structure at 1.6466, this means that weakness will be coming in from the euro, or the Canadian dollar will be getting stronger, which is something that we'll get into going into this week. And then this means that we might be looking for selling opportunities, but only and only if we do reach this weekly break of structure. Until then, anything is possible, and we are still structured to the upside. This means nothing yet to us as buyers. It means that we are getting a deeper discount, but if we do reach this, and if we do get bullish patterns and formations that are valid from this level, take them. This would be the target that we will be looking for. I personally will be looking for, and the real account traders community, we do share the same uh, mindset and opportunities when it comes to this. So of course, this looks like it's going to continue to the downside. You will not force a buying signal on a market that looks like it is still going to continue to go to the downside. So whatever it is that is happening right now, we wait to see a strong momentum to the upside, and then a pullback, momentum, pullback, and lastly momentum to take out structure at 1.6466. Now with that being said, traders, this is the euro and the Canadian dollar. Let's go straight to the pound and the Canadian dollar. And traders, with the pound and the Canadian dollar, very simply put, we were still structured to the upside, didn't get any valid buying opportunities. Even from yesterday, of course, we didn't get any valid opportunities to go to the upside. So with that being said, traders, what we are looking at right now is a sharp movement to the downside of the Canadian dollar. And this, to me, let me zoom out so that we can understand what I'm talking about. Of course, this to me looks like it is, do you see this? New high from this, new low from this, new high from this, if we do make another new low from this market, I will stay away from for a quite some time, right? Now, what does that mean? This means it's doing the same thing that made us stay out of the euro and the GBP. Why? Because this structure is no clear structure. There are other currency pairs that we are dealing with on the real account traders community. That is why it is important for you to join the real account traders community and understand firmly what we are doing or what we are dealing with. Now, with that being said, I'm zooming back in. I think this is already invalidated the setup of buying opportunities, because look at this is a straight push to the downside through the 78.6 Fibonacci retracement. Let me show you what one of the signals that we do have on this is NZD US dollar. This is the Kiwi and the dollar. Now you see, if you are not in the real account traders community, you are missing out on signals like this one. You are missing out on signals like this one. But for those of you who still watch and learn, it is very, 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 very advantageous that you learn through this, and you see how it is very important that you see how my mindset, how I react to the market, not doing exactly what I want it to do, and how I adapt to the new market conditions. Now, with that being said, beautiful traders, for me, this is what I'm expecting to see. Let's go back to the charts. For me, this is exactly what I'm expecting to see. I expect to see a pullback to retest this and a continuation to the downside to make that 1:3 risk to reward ratio. Now, this is exactly what I'm looking at. I'm not looking for any buying opportunities on this pound and the Canadian dollar pair. Nope, I'm looking for selling opportunities. Why? Because of this strong momentum without a pullback to the downside through the 61.8 Fibonacci retracement and the 78.6 Fibonacci retracement. So with that being said, traders, let's go straight to the last but not least, Euro, US dollar, and the Canadian dollar. And last but not least, the US dollar and the Canadian dollar, what we do have is a pattern. Now, if you're not paying close attention to this, then you see random charts. But if you're paying close attention, you would understand that the Canadian dollar is having some sort of strength, because in the euro and the Canadian dollar, we are going down. In the pound and the Canadian dollar, we are now structured to the downside. In the US dollar and the Canadian dollar, we did have a buy from this level on Monday. This was the signal, and the continuation was on Monday. And I did mention that we did put stop loss right here on the opening of yesterday's price, right? And we came back, took small profit, maybe 1:2. I remember very well, it was 1:2 right here. And then after that, came back to the downside, change of structure, of course. But we were thinking that today this might be a bounce to the upside. But early in the morning, during the Tokyo session, we did have this. Right now, we are going to the London session, and we are still going to the downside. What does this mean? It means that the Canadian dollar itself is going to the upside. It is gaining momentum. It is becoming strong. So with that being said, traders, what do I expect from this pair? If I do see this come down to these levels, break the weekly break of structure, of course, and this would be a great place to look for selling opportunities. Of course, the break and the retest of the weekly break of structure, or they just even a touch of this, not a break, but a touch of this weekly break of structure right here at 1.3981, and then a pullback towards this demand zone, which will now act as supply zone, or this demand zone, which will act as supply zone at 1 point. The first demand zone that will act as supply zone is 1.3997. The second one is 1.4009. Now, this would be great places to look for selling opportunities. Let me remove this so that you can get this clean and clear. Now, if we do reach here, the first place that we'll be looking for selling opportunities is this one. The second place to look for selling opportunities is this one. The overall intent for this is to make that 1:3 risk to reward ratio, nothing else. For now, we are still structured to the upside. Anything can happen. If we do get this momentum to the upside, then we will take it. But if the market drops and reaches the weekly break of structure, we are not interested in buying no more. Why are we still biased to the upside on this? Because of the demand zone is still not in thoroughly or clearly invalidated. It's still being tested. So with that being said, traders, that is it from me, Vincent Mokotedi from VinnBoss Signal Factory. I will see you again tomorrow with the analysis from me and VinnBoss Signal Factory. So that's it from me. Thank you. Bye bye and have a fantastic trading day today.